There we go. Yo, what is good, YouTube? It is your boy Booba here with the first ever Forex trading video. Um, Honestly, I was gonna do the analysis just like privately like I always do, but I figured I might as well just start dropping them on the channel weekly so everybody can kind of check it out and just see like how I approach the markets to be able to find my moves throughout the week. And I just kind of wanted to start a routine of like, hey, like I do this on the side all the time for fun. Like this doesn't feel like work to me, but I know there's people out there that have a deep passion for this that don't understand how to make this something that's easy to do and feels a lot less like work. So before I even get into anything as far as breaking down the charts, I'm just gonna simply show you guys an academy that I actually recently got involved with that you guys definitely should check out because this academy honestly helped me find a way to go from that swing trader mindset to being able to scalp in a very comfortable manner. And honestly, like the swinging aspect of things took me a lot of time to actually be able to like it took me a minute. I'm not even gonna lie. It took me a minute to understand swinging because I was a very impatient trader. Swing trading takes a lot of patience. It takes a lot of confidence in what you know and understanding to just trust and leave shit alone. Like that's so important when it comes to trading. Is to don't touch anything and make sure that the odds you're getting into are the best in your favor. So as far as the academy that I want to show everybody, it is called Real Rise Academy. And what I'll be doing, hold on a second, because my screen is tripping. Hold up. Okay, let's share this back. Okay. I have to minimize this to get to the link, but here it is, right? So this is Real Rise Academy. These guys are fairly new in the Forex trading industry. I have been through several different academies, and I'm not gonna lie to you, this has been one of the best layouts for an academy as far as their approach to teaching. It's very quick and concise. It's not like you're gonna like if you're new to trading, of course it's going to take time. I'm not going to sit here and sugarcoat this process because I'm a 4-year trader and granted I still struggle to get results to this day. But for me it's just sharing the knowledge that I know that could potentially help that next person. And I know this is a environment that it is a network-based environment and you do need to be able to kind of like connect on that basis with other traders to kind of help them get that leg up as well. Even if you're not winning, seeing other people win in this industry is great. It's a great thing to be able to help people understand how powerful of a tool this really is. So with this, I will be putting my referral link down into the description of the video. After this, if you guys are interested in following me under this academy, you guys can definitely reach out to me and we'll go from there as far as me just kind of being just kind of creating a schedule around a live to again just break down my method of approach because the way I break it down is the core component comes from how these guys teach their scalping. But the other side of it is like my experience of swinging over 4 years, and also passing a couple FTMOs, but fumbling those bags too. So like I've definitely had a very up and down journey with trading, and I'm just still trying to find that consistency. So again, something that's been helping me gain the confidence to be able to even do a video like this has been me finding those little tweaks in my trade strategy to be able to help you guys out. But again, if you guys want to get into trading, you guys are fairly new and you guys want to find a trustworthy, liable source of information for how to really properly look at the markets and not in the way that you're being taught on baby pits or something crazy like that. These are the guys right here, Real Rise. Again, I will be putting my referral down in the link if you guys take a form of interest after this video. Okay, so what I'm going to start with, right, is we're going to start with just my core pairs that I watch for the week. I actually have separate lists for different pairs going on here. My orange list is generally my cryptos, just other stuff like um, gold, commodities, US 30, NASDAQ. My blue list is my main pairs that I watch for the week. So AU, AJ, GJ, and UJ, and then GU, because a lot of these pairs are correlated. So when one's moving, I can actually have more confirmation that another one will make the similar or same move. Okay. So my approach, right, when I come to the market is I work top down. I know a lot of traders have been taught this. Top down is the best way to approach the market because, again, the high frames carry the weight. The high frames make things happen. It kind of dictates where things are going to go. It dictates where the smart money is going to go. And if you know anything about smart money, and don't know anything about smart money, I will say this academy teaches you all about the central banks. They tell you about outer banks. They tell you about how the manipulation works in the market for you to better understand how to approach this consistent. So here, what I like to do, right, is I start from the monthly to look at the candle, right? Because the candle in itself takes a month before it prints, right? Right now, it is the 1st of May. Okay. It's the 1st of May. Market's gonna open at 4 o'clock. As we can see right now, it's 10:08. So market's gonna open at 4 o'clock. We're gonna get a new candle. The last candle that was being printed on the monthly was going down against this previous bullish candle. Okay. And that's honestly just telling me it was a test at this level here at the 7,500 flat level, which is also a bank level if you know anything about bank levels. And now it's making that push down to break the lows at what seems to be the 70K flat level, right? So when I see that's what's happening, what I like to do is, because I'm working top down, I like to trap the price in its behavior and what's happening. So what I do is I move down to the week and I like to mark my bank levels correlated to my peak weekly highs and peak weekly lows. You could say, yeah, this is a low here going up to this high. That's totally fine. But if you wanted to, again, trap the price, I'm looking again at the peak low. So 70K flat is the level that the most previous reaction happened to, and it's also the level we're going back to. So now I know, if future reference, if that next monthly candle bounces here and starts moving up, I know it's just a retrace. I know it's just a pullback, because right now structure has broke here for price to potentially make that break of structure here to continue lower and then go test down to these wicks. Now I'm going to get into the wicks and all that stuff in the next frame. But again, I like to find my weekly bank levels here. So bank levels are values that the banks, which are also the institutions, which are also, in a way, the lazy traders like to keep an eye on, because they know the most potent reactions are going to happen at these levels. They're really, really strong levels, and you're going to know a lot of money gets dumped into these levels to make these moves go the other way. So for price to come to 76 flat right here and to have the reaction it did, I will tell you right now, no retail trader, I don't even have enough money to make this market flip the way this happened. And the reason why this happened is because, again, this wick being created just tells me, hey, institutions got involved. They pushed it so that they can make their money. And they were coming back for people that were buying back here, right? So I always like to look to the left of the market to figure out where we're heading. And I like to do it relative to where we are. So again, starting with the monthly candle working down, you can see now I have the monthly candle trap. And if a new monthly candle starts, everything that's being printed down on those low frames is just details to that candle. Okay. So that's how I look at price, right? What I like to do is I like to mark this as my weekly targets, because again, these are just the areas, the ends that the market can touch, right? So now we have that. And what I like to do from here is, again, we see prices moving down. If you know anything about market structure, you would know that price, when creating a downtrend, likes to make lower lows, lower highs, lower lows, lower highs, lower lows, right? So right here, we have a lower low that was being created after it broke this low. You have a lower high here that didn't break this high. You have a lower low here, which kind of didn't get broken until this candle itself here. So this became its lower low. And now you have this lower high where this price came up to this high. It wicked at it, right? But didn't break it. Okay. And this is something this is so vital that you have to know about trading, is that for structures to break, you need to see the close of candle past the wicks. So because it wicked off of it, it's still valid. It's still a valid downtrend. You can still see it as this if you wanted to, just like so, right? You can even move it down to here, okay? And you'll just see, like, price wicked, it didn't close, so that's why it didn't break. And now you have the potential of price coming to this level to break here, okay? So it's simple. Price can only go two ways, right? And this is also another reason why I'm confident showing people this strategies, because I had a big psychological block with trading, where I had an issue of trying to be right all the time. You don't need to be right all the time in the market. you got to do your math right in the market. That's what matters. You got to do your math right. If you're risking properly, you'll never have to worry about whether you're losing or winning a trade. It's all about applying the skill over and over. It's literally like rolling dice. And that's the mindset and approach you have to gear yourself towards so that the losses you see don't really affect you as much as the wins because it's just you doing and applying the skill. Okay. So now we know price is trapped, right? And if you know anything about the markets, again, you'll be able to learn these details as far as the Real Rise Academy if you want to get in depth with certain things. But I'm going to keep it very vague and simple. Okay. And what I like to do when I move down onto the daily frame is now that we have the weekly trapped, right? I now know this is the motion of the whole weekly chart. Okay. And what I'm looking for now is my take profits going both ways on the daily. Okay. So the way this works for me is, again, I had a psychological block of trying to be right all the time, which caused me to lose more money than actually make money over time. In the market, to have a bias is cool, right? But is it necessary to have a bias? Not necessarily, because if you have a bias, you're wrong. It'll affect your trade psychology. And now you're stagnant. You're probably not going to react to the next position that you see setting up. And now you're missing money moves all the time. So, what I like to do, right, is I like to mark my TPs going both ways. Again, so here's my TP1 as far as the daily, because the reason why I'm marking this is as I look to the left of price, I look at where was a wick created that pushed price up but really never came back, right? Because now it's coming back, it's a potential take profit level. The reason why is because banks would have to come collect money. Okay. So here I put a TP1. Okay. Right. I would look further to the left. What's the next point where price was pushed up, right, in its previous trend to create this entire uptrend right here? Check this out. Create this whole uptrend right here. Okay. So this is why I'm marking my TP levels the way I am, because these are significant levels to look at. Okay. Put that back quick. Okay. So that's TP1. To me now, right? I'm looking to the left on the daily again. And when price was pushed up here, right, I like to trail it down. So my TP2 would be, this would be the next most significant level to me, right? Because price came down, it created this low. From this low, institutions got involved and it never came back. And especially it caused the trend to continue. So it created this high. It broke the previous high, created this peak high here, came down to create a new peak low. And again, you had another push up, right? So again, this is kind of relative to our TP. You could stress the TP1 back to here if you want. It really doesn't matter, but I like to keep it relevant again, because I do not like, hold up a second. All right, sorry about that. But again, right? So this is relative to what's recent. I always like what's fresh because again, the market's significant points in the past definitely are significant, but sometimes they don't hold up. And usually the more recent stuff does. So it's not saying you shouldn't go back in the past to look, but it definitely helps to keep things relevant. Because again, it's like, okay, this is where we left off. We should be coming back, right? So now if I'm looking at the next point, right? Again, I want to keep my trades kind of concise throughout the week. So I don't need too large of gaps between these wicks, these institutional rises and falls. Okay. So here I see a wick where price was pushed up, price never came back. I'm going to consider this my TP3 just for a makeshift target. Okay. Now, those are my three TP levels on the daily as far as where price has left off money. Okay. If I'm looking at it in reverse, right? Now I'm going to do the same thing going upwards. And this is the bread and butter to my strategy because I don't care about a bias. A bias is a setup. It really is. Market's not always going to play out due to your bias. So again, both ways, I'm going to look at it as, okay, there was an institutional push here. So this will be my TP1 going the other way. So if price decided, hey, let's break structure on the daily, let's make a reverse, I already am ready, right? I already have the targets there. It's already set. And remember, I've already trapped the weekly candle or weekly chart in itself. So now I kind of know within the week what things are going to be doing as far as I know how to read the candles off my lines. So here we have a TP1, here we got a TP2. Okay. And the reason why I'm marking this again is there's a push that happened here, price could not come back to that. And then again, there's another push that happened, price couldn't come back to that. So this is institutions getting involved. This is them sending money down to collect money on the opposite side. Okay. All this stuff right here is what we would call liquidity. Again, Real Rise Academy goes into heavy detail with that. So if you are interested, get involved for sure. They're well worth it. So here, this is what we would consider liquidity, and this is why price is coming to grab money. Institutions are coming to grab money. Okay. So here, liquidity is getting wiped out. They're collecting contracts, but at the same time, they're leaving money behind because at a point they had buys in, right? And now these buys are now in negative. Okay. So later on, these become take profit levels. This is why I'm marking it both ways. Okay. So now here, I have my third TP just shy above this. I like to trail it up. There's another one here. Okay. I like to keep it nice and tight because again, trading is about the consistency that you can find the moves within a week and also within a month, right? So you don't have to over trade. It's a matter of showing up at one set time and being able to identify the opportunity in that moment. That's all that matters. Because if you can do that, you'll maximize how much you're making. Okay. Now, those are my two directions of TP1 3 on the daily. And now what I like to do is drop to the 4 hour. And this is where I apply all of Real Rise's knowledge. This is where I get real nitty gritty with what goes on. Right. So from here, right, what I like to do is I like to look at the 4 hour candle because the 4 hour candle is like a middle point of the market. It's like a midpoint. So you have to think one candle is taking 4 hours before it prints itself, right? And let's say you have, for example, this potential setup here. You know, price was trailing down. It's at a low. It's trailing back up to create this to test this previous high. And now you're looking for that timing to get in, right? And you have to remember with the markets, the best way I can explain the markets is it's like a Russian doll, like a doll inside of a doll, inside of a doll, inside of a doll. And if you understand how candles print themselves and the motions they create and how they work, you will be able to figure out, okay, the initial movement is generally the fake movement, right? So if I had a 4 hour candle start and it waked off, right, it would take about 2 hours before it even signaled that wick, which means now in the next 2 hours, you'd be able to find your entry. So you would be able to drop to the 1 hour. And after about 2 hours of price going up, 1, 2, now 1, 2 is coming down, you would know it tested. And now you can get involved because again, it's like finding puzzle pieces, right? So you had this high here. Okay. You have this low here. Okay. So if price coming up, coming back up and testing a high right here. In essence, if I'm going to replay this, like let's just think about it, right? Let's just think about it. We had the momentum from the high frame carrying downwards. Okay, it's carrying downwards. We know we have pools to collect back here. We know we have our TP marked way down here. So in my mind, right, I'm trying to complete the puzzle piece according to the high frame. And this is why I respect the high frames because there's a lot of times you can see a scalp opportunity and it'll be a fake out, it'll be a setup, or it'll be a very brief temporary move where you're not going to really make a lot of money off of. And it's in a way, it could be a form of greedy trading depending on your experience. If you're really well versed, if you have the knowledge in this, for sure, like rock out, go crazy, right? But if not, don't mess with it. Always try to complete the puzzle. Complete the puzzle, okay? You know your candles, you'll know why, right? So in my mind, right, I would take this as a sell setup and I would do it respective to where the previous high was, and I would take it down to my TP1, just holding that, okay? And this is all hypothetical. This is also still how I actually approach the market on a day-to-day basis. This is actually how I can still avoid at times not losing money on signals that we may get because I'm always focused on the higher frames. The high frames is the big money. The big frames don't move without big money making that move. Okay. So again, I'm completing the puzzle. Okay. So from here, that's when you can just kind of wait. And also, you could even work off the 4 hour and do everything relative to that if you wanted, right? So, now you had this 4 hour drop, you're getting this bearish engulfing price on the 4 hour broken structure because you had a low here, you have a high here, you have a low here, and a lower high here, which is telling you break a structure. And if it breaks this structure, you may get a retest for your entries on the way down, right? So that's my strategy. That's how I approach the market. This is my routine. And I'm going to go into more depth here as far as what Real Rise has taught me to be able to implement the ability to find my scalp moves. And that first segment was all me. That's all how I approach iframes. Now, down on the 1 hour, this is where we have all the actual real fun when it comes to this, because it's hard to understand this at first, but when you already have mapped out everything going on the big frames, isn't it now more clear and easy to know what's about to happen? Boom, my point exactly. You need to have a map when you're trading. That map is what's going to let you maximize what you can make within a week, within a month, within the year. Of course, within the year, there's so much movement going on in a year. So right here, if I'm looking at this setup, right, we had the price at this high, price came rejected. I would take that sell for sure, because again, it's flowing with the outline of everything, right? It's flowing with the outline of everything. And now with the 1 hour, what I like to identify, this is what Real Rise has taught me, is our swing highs and our swing lows. Okay. So this is your swing high here, and I would consider my swing low here. Let's see, let's okay, boom. So this would technically be your current, your swing low at that time. Your current swing low would be down here, which means when price came back up, your swing high still held strong, and then price came and broke your swing low, which created this new swing low, right? So what these are anchor points, okay? And the reason why these are anchor points is because when price breaks the structure, we're now looking for the price to go the opposite way. So let's say price were to come all the way back up and were to break this swing high. We now know from this swing low, we're still in an uptrend dealing with the larger frames. But right now, we are in a downtrend dealing with the lower frames, okay? So again, from this swing high to this swing low, you now have this new lower high where um you have a new lower high here, right? Where price could not come back to break your swing high. And the reason why this now becomes your new swing high and this becomes your new swing low is because from this high down to this low, this high was what caused this previous low to break. Okay. So this was your old swing high, your old swing low. Okay. This is all fun to me, yo. Like I do this so regularly. It's not even a joke. Like I've done this for 4 years and I get it. I'm gonna be honest about how I haven't had my results so consistent, but I've seen the potential of what I can do just with off the strength of knowing this alone. So again, I want to share this knowledge for everybody because I know people are struggling trying to figure out what's going on, how to see things clear, and so on and so forth. And this, like I said, Real Rise has really helped me figure this out. So now you have here, okay, your swing high, your swing low. This was now your new swing high because when price trailed up from your swing low, it didn't really peak anywhere near this. And then it became the reason that the break happened at this low. And your break didn't officially happen on your 1 hour up until you had the right candle close. So you can draw out from the wick to where a candle actually closed at that wick and make it break, which would have been that candle. Okay. And now what this is now your new flip zone. Okay. So this is now your flip zone. So now if price comes back within here, we're looking for price to have a reaction around this flip zone, which was where your previous structure was, to now push down lower to break your swing low. So long as what's going on here respects your swing high. Okay. Now, if I zoom out, everything can be tracked. You know what's happening from top down. You know what's happening from top down. Okay. And now here is the sweet part, right? When you learn how to trade like institutions, that's where things go up another level because now you know you can trade so comfortably knowing that you're trading with the big money. You're following the true trend of the market. Okay. So here we know, all right, we're going to get a reaction. If I'm smart, right, that's a big move. I'm not going to be overly greedy. I'm going to look for the entries to go, just kind of soft and just give it space. So in my mind, I'm looking at it as like I intend for price to respect the previous anchor point. And remember, swing highs or swing lows are your anchor point. So when they break, they become the new reactionary level. Now, there's also some things called block orders, but in the Academy of Real Rise, they call it real rise blocks. It's the same concept as block orders. If you've ever heard of mitigation, block orders, those terminologies, you will definitely get the in-depth on that. And I don't want to get too in-depth with that because I feel like that'll throw everybody off. But I just kind of wanted to help people be able to see how I break markets down to help me figure out how I can trade comfortably. It doesn't even matter about winning all the time, but how can you trade comfortably where that later on over time, the amount you're compounding, and if you're doing the math right, starts to add up. Okay. So now I'm taking this trade down at the very least to the weekly target because again, I like to find compact move. If you're a swing trader, yes, this is a great setup. This is an amazing setup. But now here's the trick of it all. Like, bro, this is this is like a huge move at the end of the day, right? Because the reason why I'm saying that is because if I go up to the daily, we get that, yeah, price is breaking down, price is making that move down, and price can come down here. But think about it, 24 hours before one candle prints, that's a long time. So this whole move in itself could take weeks, days to weeks, 2 days to weeks. And you have to be comfortable with that if you're going to take that setup, right? So it's so important to have the overlay, the map to figure out what's going to happen next. Now, this is where Real Rise gets fun for me because I can find the in-depth way of getting just a simple move, right? And the reason why is because they'll teach you things like liquidity and you'd be able to see things like this, right? This would be a liquidity zone. This means price was consolidating, was moving sideways, price broke out, and now it's left a pool of money behind where they're going to get back involved with it. So here we would do, we would mark this as a liquidity zone, and you would know if you know anything about institutions, they attack liquidity zones. That's what their targets are. So for me, if I'm real rise trading, right? If I'm like looking for a scalp setup, my setup would have been I would have been looking down on the 15-minute and I would have been looking for my entry up here. Now there is a specific way that we have entries be done in the Real Rise Academy. I am aware of how it works. I'm not the best at finding it every single time. I'm just really good at what I know from my experience. So I react based off of that. There's times they've sent signals, it's been the opposite trade, and I've seen the opposite move, and that would play out. No one's perfect in this market. It's all about risk to reward. It's all about your math at the end of the day. So from here, if I'm looking at this on a 15-minute setup, I'm comfortably taking this nice 4-to-1 setup. And I'm comfortably knowing as long as I wait within the day, something should pop off, whether I'm stopped out or not. And if I risk right, I'm not going to look back at it, right? Because again, it's in confluence with the high frames. So here I would let it play out. You would come back, you check it occasionally. And I like to make my stops break even when price breaks a structure. Okay. So the same concepts of your swing low, swing highs on those higher frame, they still play out down here. So you wait for your break of structure. Boom, right? So that's our break of structure. This candle closed, broke this. Now you know this is your break of structure. You also can mark it as a flip zone as well because you know if price comes back, you're looking for the test. And honestly, if you're a well-seasoned trader, you're very experienced, now you're looking to scale in right here. Okay. Boom. And you'll take that down to the same level because you're looking for liquidity to get wiped out, a pool of money left behind to get wiped out. And you would just do your stops relative to your previous highs. So here you would wait again. This is another like close to 3-to-1 setup. I'm just kind of like paraphrasing everything and just keeping it loose for you guys. So it's not all crazy detail. Again, if you guys want crazy details in this academy and how to make things very clear for yourself, like get involved. Again, I'll drop my link in the description for you guys to check it out. But for sure, this is how it would work, right? And you would just be patient because within the day, right? This at least took almost the day for the setup, right? So starting from the daily open, which would be around like starting from the daily open, which would be at 0, which is early morning. I think it's coming out of London, going into New York. You would have the daily open price, and daily open price is something you'll learn about as well. But you'd have that daily open price, and from that point, within the day, you would have at least closed out what seems to be here. Well, first off, this would be at break even. This would be at break even, and you would have at least closed out right here. Actually, do something. Do this real quick, just so I can see what percentage you would close. You would have closed about 3% here. So on a bigger account, yo, if you know anything about just risk to reward, if you always risk 1%, I'm sure a lot of people hear about this risk to reward, risk to reward. You need to have proper risk management, yada yada yada. It's so true. It's so true because it's the key part of trading. So what would happen is in that very same setup, by closing that 3% from just here to here alone, you can see clearly the whole move went down as far as a swing if you're a swing trader, because again, you have the map, right? But if you wanted to compound and make money on a day-to-day, week-to-week basis, you're going to be able to get involved in a very detailed level because of what we teach in the academy and because of how I look at the high frames and how I map things out. So the ability for you to close out in a week will be much higher. And if you're closing 3% even within a day, that could be $750 for one account. Let's just do scales, because I know now there's this big funding. There's this thing where like people know about FTMO and all these different firms that fund people, and there's a lot of people that are getting involved with it. So if we're doing it relative to the highest accounts for most sites that you can put down money to test for, and you close 3% on this, you would see here 3 Gs. You would have made 3,000 from just here to here. And $3,000, if you had already like passed that account and made that in just a day, you would have 9 times out of 10 stepped away from the computer. Sure, if you're seasoned, again, if you're like really, really well hip to how to read candles and how to, again, complete the puzzle, you can then come back and then place another 1% risk, which would only be $1,000. And then you could probably make another 3, 4, 5, and in this case, 7,000 off this set, 1 to 7, 1 to 8 move. Okay. So, but then again, you have to think there's a trade-off with these two. With this, you're likely to get stopped out. This is where a lot of traders lose the battle with their mental, because they get stopped out. Oh, the move went my way, yada yada yada. Well, it's like you could have got back in if you just weren't emotionally upset that, hey, it's possible you're gonna get stopped out by squeezing your stop loss like this. With this, it's a comfortable position, but you would have had to wait, and you would have had to wait approximately 1, 2, 3, 4, 5, 5, 6, 7, 8, 9, 9 days, give or take 10, right? Just to get to the full hit of your target. But at the end of the day, you would have known and you would have been comfortable because, again, you have everything mapped out from your weekly target to your bottom, to essentially your weekly high, to your weekly low, so on and so forth. And all these little details as far as swing high, swing low, you'll learn from the academy again. But this is just what I wanted to show you guys as far as my approach. And I felt like this is something I definitely should be sharing because, again, people are on this trade wave, yo. Like a lot of people are in it. And I definitely have been in this industry for so long. I've seen the potential of the results that can be earned. And I've gotten to a point where like I'm at that door of breaking through. But again, it's that consistency of just trusting everything. And this is a method I found recently to help me trust everything. So that's the video I wanted to share with you guys. I hope you guys definitely enjoyed it. I'm definitely going to be doing weekly analysis on a regular basis from here on out, because this is just something I genuinely do for fun. Like I literally will wipe these charts and I will go ahead and go through every single pair like it's nothing, because I'm repeating the same formula on every pair, which allows me to see opportunities every week, which then allows me to execute on them in a way that you wouldn't really need another person to tell you, hey, get in here or get in there. You're just gonna know. But again, it comes with studying, it comes with time, it comes with experience, seeing the same stuff over and over again. So here, if I go back up, all that movement just happened in about 2 weeks of candles. One, two. And again, you would have put the puzzle together because on these weekly candles, you seen price was bullish, you seen price was dying out, you seen price to this fat wick. So you know institution grabbed a large amount of money up here because they created liquidity back here. They grabbed it, and now they were trying to go down to wipe these guys out. So all this stuff is knowledge to know, in depth for sure. And this is stuff that again, like I hope to help you guys better understand over time. And even this week, like this is still my weekly analysis because I know price is right here right now. So I'm going to take this off. I know price is at this level, but now check this out. I'm going down to the daily. If I know anything about markets, again, price creates lower lows and lower highs. So this is a low for the daily. This is a lower high. This is a lower low. This was your lower high because price tried to come back up, couldn't break these highs. Now you have a lower low here. Okay. So for me, I'm knowing we're at a low on the daily. And all I want to do is, again, connect the puzzle, make the puzzle make sense, right? So on the 4 hour, price is coming to break this low. There's strong momentum coming at this level. And what I'll be looking for is an entry, excuse me, down on this 1 hour over here. So I would apply the same knowledge of where my swing highs, swing lows are, which would be over here. So we have the swing high here. Because again, this was your high that led to this low breaking. Okay, so you have your swing high. You now have our swing low down here. And what's price doing? Coming at it strong, very strong. Okay, so now I know these are my two anchor points. And now I know I can go down and play. I can go down and go ham. And I wouldn't get involved again until the 4 hour makes sense to me because your 4 hour is your middle ground. So at 4 o'clock, we're gonna get a new candle today. We might need, excuse me, we might even get two new candles because we might have the 12 o'clock candle that's going to open while the market is closed and then do its thing. And then we're going to have the daily open at 4 o'clock today. That's going to actually be the candle we're going to start dealing with. Again, it is Sunday. As a professional trader, there are days you want to be off the market, specifically Sundays and Fridays, because again, you want to watch the setup. So if you know most of these candles throw a fake when they start, and we're on the weekly, we're going to have a new weekly candle start, which means that new weekly candle, for all we know, could want to retrace against this. But it's the likelihood is low because the momentum is strong to the downside, but it's always possible. You can never count it out. So as me knowing that, I would wait on Sunday to see what's going on. And then once it sets up on the weekly, you can use the daily to decipher what's going on in detail and the 4 hour to decipher when you want to enter. Because now let's say, for example, you have that. This is just I'm gonna paraphrase. Let's say the daily open started up, daily open went up, and then you have it's slowing down and wicking, and then you see on the 1 hour that structure is just testing this low or this previous high. You would then look for your setup somewhere around here, knowing that now your candle is probably going to reverse the other way, and then you could take it down your TP1, and that's a 5-to-1 setup. So this is how I look at the market, and I want to just share this knowledge. It's powerful as hell because again, there is no bias. I carry a bias anymore to the market. It's honestly how I found that I lose and I get more emotional with something you shouldn't be emotional about. Again, there's so many other details I can go crazy into. I actually never even got into the institutional blocks, but if you know about it, you could apply it how you know. And if you want to learn how the Real Rise Academy does it, again, I will drop my referral link in the video below or in the description box below, so you guys can go ahead and check it out. And if you guys are interested, you can sign up under me, and I will for sure be your guide as far as how I approach things on a week-to-week basis. But currently, I am testing for another 25K test. So I'm just going through the process and the ropes of that. And I'm just going to see how that plays out. But at the end of the day, progress is progress, effort is effort, and practice is practice. So everybody, I hope you guys are all doing what you can to level up and try to be the best versions of yourselves. And I hope to help you further in you guys' journeys if you guys have any questions, because this again, this stuff is actually fun to me. I don't buy this does not this is effortless to me. I can find all these moves and these positions just fine. So if I can help the next person do it, I'll be more than glad for sure. But again, thank you guys for tuning in. Hope you guys have a great day. Bless. Peace out, guys.